Okay, Monday, the 14th of August, 2023, and the summer is kind of tucking in its wings, and we're going to be getting our jumpers on, and you can see I've certainly done that here. Anyway, welcome to the week ahead, Monday, the 14th. So, pretty quiet week by comparison to what we had last week. This week, that's an understatement, really. We had the CPIs and PPIs last week coming in soft, which is fantastic. Yet equity's not really supported. So we're just going to look at what's on the docket this week before we get into looking at a few stories, a couple of markets. So Tuesday, you can see here we're just not really seeing much about other than core retail sales, Empire State Manufacturing retail sales, and then we're getting into UK CPIs on Wednesday, GDP for Eurozone a little bit thereafter. Let's see. Oh, sorry, just like bring that up there. What else? Building permits. But really, I think Thursday is probably going to be the more interesting day, given that we'll have the CPIs out of Europe. And sorry, this is Friday here. So Thursday, being that initial jobless claims number out of the US, tier one data. And I'd say that's kind of, tier one, not tier one alpha data. And then Friday, probably the CPI out of the Eurozone, potentially, probably having a nice card out of play on the rest of the equities markets. Then as we look through to some of the stories that are, across the airwaves this morning, you're seeing, landlord sales rising in the UK. So, not a hugely tradable event at all, but quite interesting to see these spikes kind of coming back to essentially coming back to around 2021, early 2021 levels. And, we've been seeing sort of a general steady exodus at these elevated levels here through kind of Q2 of 2020, or sorry, all through 2022, and seeing a respike now. So I mean, what does that mean? What is that? How do we trade that? I don't think it's a tradable event. I don't think it's a sterling or a gilt trade at all. But I just thought, interesting to note that people are kind of shoring up their investments, and probably putting a little bit more housing stock on the market. I don't think that's going to help renters out at all, as the cost of living does maintain a pretty punchy set of readings in the UK. Staying within kind of the northern hemisphere around Europe here. So ECB, it's a little bit of talk. We're getting into something a little more tradable. We're seeing a peak, 4%, hitting in September, and I think the markets are really going to start to price in or already are starting to price in when the cuts may start from the ECB. They're talking about as early as March 2024. And, we're seeing the euro getting severely beaten up by the dollar. So, generally, a couple of the traders we talk to are super long the dollar, short euro, short pound, short yen. It's a trade that's really, really working out. And I think people are going to have to start puking their massively short dollar trades that they were in probably at the earlier part of this year. But keep an eye on this. I don't think there's anything to trade on this week, although, talking about that, you're looking at CPIs. So just, keep an eye on the CPIs on Thursday there, or sorry, Friday out of the Eurozone. I'll post a link to all these articles here from Bloomberg. Something that is tradable for the ags guys is we see in Thailand, the price of rice is skyrocketing. We're back to 2011 levels, as you can see from this chart here. And why is this? Why are we spiking? Well, essentially, we've seen India ban exports of basmati. Essentially, it's a particular grain of basmati. But that why have they done that? Well, India did this to essentially control prices and keep them at comfortable levels in India, right? So they don't want to be shipping out lots of their rice while there might be a scarcity or a supply chain shock. Next thing they know, they can't maintain good price levels within India. And so what's happened now on the back of this is that there's a bit of a dry spell cutting through the season in Thailand. And so that's led to this huge spike here in prices. And, if you are a rice trader, this is a fantastic opportunity to be, looking at the cal spreads, maybe, selling them back to a little bit of value, mean reversion, maybe, getting long, further out on the back of the calendar, maybe selling at the back of the calendar, into 2024, probably sell that what is a contango, probably going to be a contango situation now, where prices in the medium term look really high, and people want rice right now, but a very niche market, Thai white rice. I don't even know what that product ID is, but just interesting to note. Of course, chocolate as well. We haven't covered that story, but chocolate now is set to have a huge premium on it as well. So can't even, not even the chocolate is safe, kids. Here's another one that's been kind of bubbling up since last week. There's been a couple of protests essentially, and sort of some picketing on Australian gas line production facilities starting last week, and this is actually having a knock-on effect into European grade gas. The price is really just kind of, I think we're going to get back onto basically a cycle of these crazy was it TTL European gas classifications. You already saw some of that coming in last week. Now, is this a going to do anything for Henry Hub nat gas? Well, you could have been thinking that when we were kind of going through last winter and and at the early start of this year, where the European grades were absolutely, skyrocketing. And we all remember the very high prices of, petroleum and at the pumps, the gasoline at the pumps last year. So I would say that no, this isn't going to have a huge effect onto Henry Hub nat gas, which is obviously the US grade nat gas, but it's certainly not going to hurt. Now, you can't really see all this stuff going on in the European markets, and from the Australian markets having a knock-on effect into all grades of gas. There is, as we've covered a few times, a lot of storage in North America, and we got to drain down a huge amount of storage there. However, we're not going to zero, or sorry, we're not going to even $1 on Henry Hub nat gas, and we've been holding that view here in Dublin Capital for 6 months now, really, and I am trading that, yeah, for sure, on the long side. But no, I don't think I'm going to wake up tomorrow or one of the days this week or next week and nat gas is just going to be up like 20%. Whereas on the European gas futures market, you'd easily do like 40, 50, 60, 80% moves. Like very, very whipsaw type of dangerous moves to the upside, obviously. So, I just think this is worth keeping an eye on, because I think while it's not going to have a direct impact on the US Henry Hub nat gas futures contract, I think it it will over time play out in terms of, as we are now looking down the barrel of coming into the heating season, refiners are going to be and energy companies are going to be getting all their oil into storage, because they want to have that refined. Well, that's more of an oil thing. They want to have their barrels of oil refined from here to through the end of the last quarter because of tax reasons. But with heating oil, the storage for heating now is going to commence next month, or sorry, in 2 months' time. So, I think if there are cracks, if you like, and sort of if there is desperation, broadly speaking, in Australia, then looking to Europe, I think that will be them putting a call on North America to send even more LNG tankers to Europe to satisfy our needs. And then obviously we have this situation in Niger whereby you have the coup and the French aren't happy about it, and the Americans aren't happy about it. There's a lot of people, the Finnish aren't happy about it, but essentially, what's happening in Niger is again leading to more constriction of supply for Northern Europe. All right, so this is kind of this is a good story to read. You have a little bit of an overview on the global picture here as well. Obviously, breakdown of what's going on in Australia, but just one to track. I think this gas story for me, gas is not yet realized as how we are going to transition from oil to green energy, and I think nat gas is the most popular most popular energy source we can have and use right now to get us there. Okay, a lot of people say, well, what about nuclear? Okay, well, fine. You spin up a nuclear plant, within a couple of weeks, and we'll talk about it. But and there are headways in the technology to do that. Fast spin up nuclear plants, small kind of nodes, but that's not happening on a broad scale globally today or tomorrow. But everywhere is enabled for nat gas, LNG shipments in, regasification to get it out and export it, all this sort of stuff. So, do keep an eye on the gas market, and it's one that I'm actually quietly confident about. And I do like being a bull on gas at the moment after it being essentially in a 50-year bear market. Okay, here's another thing really that we have to track in terms of the oil market. This is an article just from Bloomberg tracking that there's increasing risk in the Straits of Hormuz from, well, essentially the Iranian government seizing a couple of ships there. It's not been a very secure area to be trying to get shipments through over the last month. And I think it's going to continue to escalate there. So, why is this important? Well, you have about 60% of the world's oil passes through the Straits of Hormuz. And I don't actually have a graphic up here. Maybe I can pull one up here. Yeah, maybe I could pull this up here. It's essentially, there we go. Yeah, it's the Iranian Peninsula here. So just get the Wikipedia on it, the wiki map, so you can see that essentially this is the Arabian Peninsula here, and the strait is just this tight little rounding of the cape here, if you like, around Oman and through this very tight area. So it's a complete choke point for oil now. It's much talked about, but seldom traded as the flashpoint that it is. So don't go too crazy if you do see an escalation of of Iranian aggression in these waters, essentially, right? But we do have to be vigilant. I do personally think that oil has had a phenomenal couple of weeks, and we just need to pull back a little bit, pick up the bigger bars to move on. But certainly, an escalation of the situation here in the Straits of Hormuz could just be that flashpoint where we shallow out on the pullback and we just go bid, bid, bid. So. And speaking to that, one more thing to note is that US production, well, it's back. So we're on target here for 15 million barrels of black gold coming out of North America in 2024. So, you might say, well, wow, that means that essentially we should be short oil, right? But demand is there's a huge amount of demand catch up that's coming, I think, throughout the rest of this year that may lead us to all-time highs. And then as we then go into next year and sit in and around the new record high on US production, daily production, then you get into a situation like under the Obama administration where they actually have to put oil into storage in North Continental America. And then you get into a sort of a 2014 situation where essentially the price of oil would just absolutely drop off a very gracefully high cliff, as it did in 2014. It was about $140 a barrel, and then ended up dropping until it got to about $26 a barrel about a year later. And I do remember that quite well myself, having been in the oil industry at the time. it was quite scary for a lot of people. So yeah, just keep an eye on this. I think at these levels of production, it's going to be really hard, to essentially maintain a long view on oil. And from trading some of the calendars here, I mean, I'm looking at like the front month spread or the what's this? What have I got here? October to April spread here is positive, so we're in contango there. As we look down the line into 2024, the front month spread is also positive by about 60 cents right now. So that's September to October. So really I think we're probably going to get into over the next couple of months. We're probably going to get into a situation where we kind of go back to around zero on these spreads and potentially trade a bit negative. But I think probably taking it slowly, as I should really be doing with looking at the calendar on oil. Yeah, I'd probably just target that to happen probably the first quarter of next year, if not the middle of next year, to price in, growing amounts of US production and therefore then potential storage onshore of US oil. This is a great article, really. It's got, 5 charts and commodities to look at for the week on covering that rice story, covering a little bit of this oil production North American story, and then obviously this LNG situation. Really Australia, all the focus at the moment. Okay, so as always, if you see an unwind on this Australian story, as in the protests and the labor stoppage ends, will maybe look for the softness to come back into those natural gas markets. Yeah, so looking then over to the charts and what we have. Well, here's the bund. We're not going to look too much at the bund, but really just S&P and oil. I think we'll have a little look at here, and we'll just take this off and then look at this S&P. So really, for a pivotal area for us on the S&P, a couple of great trades coming in last week. We were on this short the 45.42s, pretty much to the tick there, and down we come. I think this market's got a little bit of trouble ahead, just a little bit of trouble ahead. We're kind of breaking this trend structure. Personally, for me, I think we need to drop back down to 43.55s on SPOOs. And, that is going to be the talking heads talking about there being a significant pullback. It's 2.62% down from where we trade right now. So I wouldn't buy too much into the hype, but there should be some great buying opportunities coming through in the equities markets over the course of this week and potentially next week. There's no great significant market driver like an FOMC or a CPI now to come that the market is going to wait for. So I think if the market's going to make a move to the downside or equally to an aggressive move to the upside, it's gonna be the first probably 3 days this week, I think. So yeah, just keep that in mind. And then oil, let's have a look over on oil. Just tidy up this chart a bit, and you can see that I was looking for heavy action back down here around this the 78.65s. We are trading over this initial gap up on the first Saudi 100 mil, or sorry, 1 million barrel, not 100 mil, 1 million barrel cut. And if we all remember that one, I was actually getting long the September December spread here, and took something nice out of the resulting continuation push up, and then as it came back down into the gap. I wasn't holding the September so much on that, but definitely running the Decembers. And then just down here, I thought we'd come back down to the bottom of the gap and bounce. And so basically then was net long again on the spread, dropping the shorts. And as you can see, it just got totally blown out of that spread position, and I've no problem talking about that at all. And we just kept on dropping, in which case it should have actually stayed in the spread and not touched it. And so, that kind of leans into what I was talking about earlier. You don't want to fiddle with your spreads too much and too often. So here we are. I think we can easily drift back down here on oil to at least 80 spot 80s, and that's a little closer, right? Well, that is the top of that gap. And you can see that, we did actually come back in here on the 7th of August. and then rallied hard out of there. So if we do drift back now, it'll be interesting to see if those buyers are waiting at the 80 spot 80s, and then we can continue to push on up. I think, I don't think we're cutting below this trend that we have here. I think we are fully sustained. HFI research also kind of talking about this downtrend. They were looking for 80, I think it was 84, 85, 60s to prove the trend breakout, but it's proven for me. It's proven for me for the amount of pullback that was then sustained and bought back up here on the 2nd of August. So I think a touch on the 80 spot 80s, watch that for the longs to come back in again. And otherwise, I think the dissipation back down is gonna be working here. So yeah, that's it really on these markets and the macro picture for the weekly look ahead. Keep an eye out for Dow, more downside, trading to QView up 35 thousands hull. And listen, stay lucky. All right, take care.